Good morning, option traders. Sam the Trader Geek with your Sunday, November 11th, 2025 option review video. We're going to go over our open trades and hope you're having a great weekend. Let's take a look at. We've got about 14 open option trades as of Friday, and we start the first one with Citibank, which also had a nice uh, drop and pop. Could you call this a hammer? No, we're still in an uptrend, but we are up 15% on our short put that expires on the 25th. Not much, but so far holding in, and we are in the sweet spot for the decay to happen on this one. So if you get down to 30, 40 cents, maybe you reduce a little bit if you have a bunch of them. But so far, done nothing wrong. MACD still positive sideways, and it's looking good. Costco, another put sale. This one's a put spread, the November 880, 850 put spread, and had a little bit of up and down action as usual with Costco, up, then down, then back up. And I tried to tag the 50-day here, this blue line here, but didn't quite get there. But we're up 37% on this, and we're at least $42 away from our short strike. So so far, so good, and we should be able to get our 50% on this one soon, $1.60. Take off a few if you have a bunch of them, and we'll probably end up rolling this out to December as we've been doing many months. Google is a new trade we put on Friday. We put on a combo uh, at a new all-time high the week before last, and we're getting a bit of a pullback. And so that's what we're buying here. This yellow line is the 8-day. We're looking for that for support. And if, as I expect, the bounce in the overall market persists early this week, then we should be able to score a quick 50% on a portion of our position. Now that we are in a bit of a correction, I'll probably scale back to, instead of 1/6 of an order, I'd probably go to 1/3 or 1/4 for each tranche, given that we have to grab our profits and keep them. And I will be keeping tighter stops in this corrective environment. So Google, we're going to set a stop at about 50% of the premium that we paid. I don't see, they've changed this around on me a little bit, so I don't see the stop column here, but we will put a 50% of premium on this one to stop out. HRL finally showing us a little bit of, I mean, we're up $1 off the 52-week lows, so nothing to write home about. We're still down 250% on this particular play, but it's a January 2027 play. We have well over 14 months on this, but encouraging to see that we could get up. This red line here is the options implied expected move for this week. So we got to the top of it. That's a good one step at a time. We have a PSAR dot there right around 22, 21. We can get above that. We should see a little bit of action and maybe get above the 21, the screen line, or the blue line, the 50-day. So one step at a time. We've got a lot of time on this. I'm not concerned about it. And if you're not in this play, maybe look at buying the 23 calls in January 2027 and selling, say, you could sell let's see what looks good out in 2027. Yeah, you could sell the 20 call puts to finance them. So do something like this. I don't like how wide they are, but again, we're going out far in time here. That's a bit wider than I'd like, and that's why we're in the um, the 25s, but I like to get a little closer. If you do that and sell the 20s, yeah, you can get this for about $1 combo. Anyway, just an idea there if you're not in there right now. J&J, we have a covered call, and J&J is holding up here right around the 183 level. It's a deep in the money covered call. We're up about 1.84%. And I talked about last week rolling this out, and it looks like till January. But I was going to do this on Friday, but I thought I'm going to wait a little bit. Let's take a look at what kind of extrinsic value is left on this particular options, because it is deep in the money and 170. So um, this says, let me maximize the screen here. It says about 73 cents. It depends on what you get for it. But when I look at the equivalent puts, there's not much premium there. And that tells me I need to be thinking about rolling this before we get assigned. And I don't think too many of you are in this play, but just in case you are, we may roll it out probably till January to get enough premium to make sure we don't get these dividend trolls trying to steal our dividend. Anyway, not the most exciting play we have on our board. NVIDIA pierced the 50-day, the blue line here, and bounced back really nicely to close in a green. I mean, at one point it was down at below 179, and we have already taken some profits on a portion of this, and we're still up 26%. We have the NVIDIA 170, 160 put spread. We never really even came close. I mean, that's way down here. So nothing to worry about here. We'll just probably end up rolling this out. And I think we have earnings coming up during the week after, or the week of, the week of the 21st. So we would definitely be looking to roll this out to December to give ourselves a little bit more premium. And the likelihood is I will be carrying something into earnings in terms of a put spread, albeit giving ourselves a little bit more room. Palantir, another short put spread. And, after another dip here, let's see, did we close above the 50-day? Yeah, maybe slightly, just right there. So we held the 50-day. MACD has turned negative. The fast line has crossed over to the signal line, but we are below the neutral line, so really fast. So we went from 207 very quickly down to 169. So if you're not in any of this, it's a good spot to pick some shares up for the long haul. And I like Palantir for the long term. Our put spread here is just fine. We have 12% loss on it so far, no big deal. Now here's kind of there's always one, right, that disappoints us. And look at what happened to the stock. I mean, it basically gapped up, got to 79, and gave up the entire move, and it's back down to these consolidation lows. And don't like that the MACD is pretty much negative and below the zero line, but I'm going to give this the benefit of the doubt. I like PayPal. I like what they announced in the last earnings, but there's a lot of overhead supply here, no doubt about it. And XYZ, the formerly Square, formerly Cash App, or whatever they want to call it, reported earnings, and that didn't please Wall Street. But PayPal at least announced that they were looking ahead and using partnering with ChatGPT to use PayPal for transactions. So that's tells me that they're not just resting on their PayPal laurels or Venmo laurels. QQQ, a little early on Thursday, and this one had another bounce off the 50-day, and we're down about 5% on this 612, 622 call spread. We put it on for 5.25. It's about $5.12, and it's worth about $4.85. And our first target is basically 50% profit. So we'll see if we're going to get the strength we are expecting for a few days. then this will be a nice pickup for us. Similarly, we did this with the SPY on Friday, and see again another bounce off the 50-day, and we're up about 12% on this play. That's a $20 wide call spread, and frankly, I should have probably done that with the QQQ, but it's okay. We have one of each now. The SPY put spread that we have expires on the 28th, so we have definitely about 19 days to go. And we've taken 4 profit targets so far. I guess I don't have the next profit target indicated. So this is a $20 wide spread. We paid $4.50 for it. And so far we've taken some pretty nice profits, totaling about, averaging about 109%. So that's really nice for us when we look at the profits on this short hedge that we've got on. At the same time, we still have a short put going out to January, and this one is up 32%. This one was in conjunction with an old inflection point spread that we sold this, and at this point we're up 32%. If you get up to 50% profit, then I would take 1/3 to half of them off. But for right now, I'm holding on to this. But given what I showed in the earlier video about the structure of the VIX going forward, I'm not sure I'm going to carry a short put like this into 2026. So if we get the bullishness that I expect into year end, then this should get us to at least a 50 to 60% profit, and then we'll close it out. I won't be carrying a short SPY put into 2026. TLT. And I say that, by the way, in SPY, meaning that I won't carry a short put into 2026, but I will perhaps do a short put spread, but I want extreme volatility to do that, to carry something into 2026 to make it worth our while. So TLT, we've taken profits on 1/2 to 1/3 of these. Here we go again, and it's kind of a broken record. We go up, we go down, we go up, we go down, and now we're stuck under the 50-day. And every time I've tried to buy a premium on TLT, it just gets chopped up. It just goes nowhere, and I don't make any money on the long side of premium, and definitely making money on the put sales, as we've done many times since last year. So TLT, we have a December 87 put, and we're still a couple bucks out of the money. We have not even threatened to touch it. Just see our low on Wednesday was 88.48. Last play we have is XLP. XLP is our long-term staples play to go along with HRL, and nice doji here, bottomed at 75. Hope you guys kind of added a few out around here. If you haven't, it's not too late. We're down 24% on this, but this is going to be one of, I think, many fits and starts until there's a risk-off game in the market that staples, which are still down on the year a little bit, start to play ball. And I think that, again, this is a long-term play. I have every confidence in it. It's the 80 call. You could still buy it today. It's at $3.68, and it's one of my larger positions in my portfolio, anticipating a recovery. And since it's out to 2027, it's not a current, let's get this done in the next month or two. This is a 6 to 12 month trade. In any case, that's all of our open trades. If you have any questions for me, Trader Geek Sam in the forum, or at Trader Geek on Twitter, give me a follow. I hope you enjoy the rest of your weekend. I appreciate you watching, and I will be with you in the forum tomorrow, Monday. So take care, and I'll talk to you soon. Bye-bye.